All right, let's dive right into this. It's pretty much the ultimate financial catch-22. You need credit to get a credit card, but you literally need a credit card to build credit in the first place. If you're standing at the starting line of your financial journey in the US, this paradox can be incredibly frustrating. Honestly, it drives a lot of people crazy. But don't worry, you are in exactly the right place. Welcome to this explainer on the best credit cards for beginners in the USA for 2026. Today, we're going to explore the exact system to crack this catch-22, using the absolute latest guidance so we can figure out how to confidently take that crucial first step together. So, here's our roadmap for this explainer. First, the beginner card blueprint. Second, finding your perfect match. Third, fast-tracking your approval. Fourth, rules for building credit. And finally, your credit building timeline. Let's get right into it.
Section 1. The Beginner Card Blueprint. What exactly makes a starter card safe?
When you're just starting out, you absolutely do not want a credit card that's going to let you drive off a financial cliff. You need a card with built-in guardrails to protect you from predatory offers and unnecessary stress while you're just learning the ropes. So, there are 4 essential features that make up a safe first card. First up, you need easy approval. The card has to be explicitly designed for someone with zero or low credit history. The bank knows you're a beginner, and they're totally okay with it. Second, a low or no annual fee. And hey, here's a surprising fact. There are predatory starter cards out there that will actually hit you with a hidden $99 maintenance fee just for existing. No way! You should never, ever pay a premium just for the privilege of building your basic credit profile, which is why a zero annual fee is critical. Third, it absolutely must report to credit bureaus. If the card isn't actively reporting your good behavior to the agencies tracking your score, it's pretty much useless for what we're trying to do. And finally, a low credit limit. Think of this as your ultimate safety net. It keeps your spending power capped so you can't accidentally rack up a mountain of unmanageable debt right out of the gate. Moving on to Section 2, finding your perfect match. Who should get which card? Finding the right starter card isn't about picking the one with the coolest TV commercial, right? It depends entirely on your unique financial status. Think of this as playing matchmaker. Before we look at specific brands, let's contrast the 2 main pathways you're going to choose between. On one side, we have secured cards. These are really fascinating because they require a cash security deposit up front, and that deposit typically becomes your actual credit limit. To put it simply, that cash deposit acts as collateral for the bank. It totally removes their risk, which is exactly why they're so incredibly willing to approve people with zero credit history. Then on the other side, we have unsecured student cards. These don't require any cash deposit at all, but they are designed specifically for and usually restricted to verified college students. Figuring out which of these 2 buckets you fall into is step 1 of our matchmaking process. Okay, let's contrast some of the top options on the market for 2026. We've got 7 standout cards here, highlighting the best options for very different needs. For example, the Discover It Student Cashback is absolutely legendary in the personal finance space because it offers incredible cashback right out of the gate for overall beginners. On the flip side, the Chase Freedom Rise is a highly strategic play if your goal is to build a relationship with a massive bank like Chase early on, just so you can eventually snag their premium travel cards down the line. But the most crucial takeaway across all these options is a single, unified theme. Every single one of these top-tier starter cards has a $0 annual fee. Remember our blueprint? You simply do not need to pay a fee to start your credit journey.
Let's get a bit more personalized and figure out exactly which card you should choose. Just find which of these categories you fall into, and boom, you've found your target. If you have absolutely no credit history and you're not a student, your best path forward is the Discover It Secured or the Capital One Quicksilver Secured. Now, if you are a student, your options are fantastic. The Discover It Student, Chase Freedom Rise, or Bank of America Student. What if you've got what's called fair credit? Say you missed a single student loan or car payment a few years ago, your score took a dent, and now you're rebuilding. Well, the Capital One Platinum is incredibly forgiving for that exact situation. And finally, if you're highly motivated by earning money back on your everyday purchases, definitely focus your attention on the Discover It Student or the Quicksilver Student for their strong cashback ecosystems.
Section 3. Fast-tracking your approval. How to get a yes quickly. So, we know what makes a starter card safe, and we know which one you want. But actually getting the bank to approve you, without accidentally hurting your fresh credit profile, requires a very specific strategy. Step 1. Apply for beginner-friendly cards only. Seriously, do not apply for premium travel cards right now. You'll just get denied. Step 2. Avoid multiple applications. Every single time you apply, something called a hard inquiry hits your credit report, which actually lowers your score slightly. Think about the logic from the bank's perspective here. If you apply for 3 different credit cards in one single afternoon, you look desperate for credit, which makes you look like a much higher risk. Step 3. If you do get rejected for an unsecured card, please don't panic. Just immediately use a secured card as your reliable fallback, thanks to that collateral safety net we talked about earlier. And step 4, have proof of income. Banks just need to know you have some sort of money coming in to pay your bills before they lend to you. For students, even a part-time job or certain grants can sometimes count here. Following this specific playbook will significantly increase your approval chances.
Section 4. Rules for building credit. The instruction manual for safe usage. Okay, so you have the card in your hand, but how do we use it to actually build that powerful credit score? There are a couple of major, non-negotiable rules. The very first number to remember is 100%. Paying your bill on time is 100% important. Payment history is literally the single largest factor in your entire credit score calculation. Think of it like borrowing a car from a friend. If you return it late just one time, they might never lend it to you again, right? The credit bureaus treat your payment history with that exact same level of trust. So never ever miss a payment due date.
The second critical number is 30%. This is the famous 30% rule of credit utilization. Now, credit utilization just means how much of your available credit you're actively using at any given time. So if your shiny new starter card has a $1,000 limit, never let your balance climb above $300. Keeping your utilization below this ceiling proves to the credit bureaus that you're responsible and not overly reliant on borrowed money. And here's a totally wild fact. People with elite credit scores of 800 or higher, they actually tend to keep their utilization under 10%. So 30% is your absolute ceiling, but lower is always better when you're trying to build a strong score quickly. Putting it all together, these are the healthy habits you need for rapid, stress-free credit growth. Pay on time, every single time. Keep that utilization strictly below 30%. Do not max out your card ever. Use the card every single month. Honestly, even just putting a small recurring subscription like Spotify on it is enough, just to show activity. And lastly, pay your full balance statement every month. I want to explicitly debunk a massive myth right here. You do not need to leave a small balance on your card to build credit. That is completely false. Paying your balance in full means you build credit effectively while never paying a single dime in interest to the bank.
Now, while the path up is simple, it's also incredibly easy to mess up if you aren't paying attention. The fastest ways to completely wreck your early progress are missing those payments, panicking and applying for a bunch of cards all at once, spending way beyond your approved limit, and simply ignoring your due dates. You really need to treat your credit card bill exactly like your rent. Unlike your favorite streaming service where you might get a friendly grace period if your debit card declines, the credit bureaus have absolutely zero sense of humor about late payments.
Finally, Section 5, your credit building timeline. How fast can you actually build credit?
If you follow the rules we just laid out, what exactly should you expect to feel over the next year? Well, in months 1 and 2, after using your card responsibly, a small initial score is finally going to appear on your credit report. And let me tell you, opening up a credit tracking app and seeing that first number pop up is just incredibly satisfying. You're officially on the board. By months 3 to 6, as you keep paying on time and keeping that utilization exceptionally low, you're going to feel real momentum. You'll see a noticeable improvement as your score actively begins to climb. And by the time you hit the 6 to 12-month mark, you'll realize the system is actually working for you because you will have established a genuinely good, solid credit profile.
This quote, straight from our source material, really summarizes the core lesson beautifully. Start small, stay consistent, and build your credit wisely. It's a great reminder that breaking the beginner's catch-22 isn't some complex magic trick, you know? It's really just a simple game of patience, rules, and consistency.
Which brings us to a final thought for you to chew on today. If you grab the right beginner card right now and stick to those essential rules we talked about, a year from now, you'll be standing on a foundation of really good credit. So I have to ask, what will your good credit unlock in 12 months? Because the difference between a good score and no score isn't just a random number on an app. It's thousands of dollars saved on a future car loan, or maybe it's beating out 10 other people for your dream apartment. The power to write that future starts right now.